And welcome. It's a new month of July 2020, and of course, second half of the year begins today. Welcome to the WebTV Market Review, where we bring you developments in the financial and capital market as it relates to the economy. Today, we'll be discussing the collective investment schemes and that space in the Nigerian capital market. And also to discuss this will be Mrs. Margaret Agbonlahor. She's the head HNI Sales, FSDH Asset Management. Also joining us is my co-anchor, Mr. Boason Omofaye, CEO Frontier Africa Reports. Nice to have both of you on the show.
Thank you. Good morning.
Thank you. Good morning, madam. It's also good to have you on the program.
Yes. Thank you. Quickly, before we begin this show, we would like to give you an update from the Nigeria Stock Exchange. The premier sustainable exchange serving Africa's largest economy has announced the results of its half-year market index review for the following indices: the NSE 30 Index, NSE Lotus Islamic Index, the NSE Pension Index, Corporate Governance Index, AfriInvest Bank Value Index, AfriInvest Dividend Yield Index, Meristem Growth Index, Meristem Value Index, and the 5 sectoral indices of the exchange: NSE Banking, NSE Insurance, NSE Industrial, NSE Consumer Goods, and NSE Oil and Gas. According to the exchange, the review has led to entry and exit of some companies from some indices, which will take effect from today, Wednesday, July 1st, 2020. Below are the incoming and exiting companies in the various indices. For the NSE 30 Index, Julius Berger is now coming into the index, while Transnational Corporation PLC has exited. NSE Consumer Goods Index, NSE Banking Index, and NSE Insurance Index do not have any incoming or any exiting companies listed that have issues there. The NSE Industrial Index has Notere Chemical and Industry PLC, while Premier Paints PLC is exiting. NSE Oil and Gas Index and NSE Pension Index both do not have any incoming or exiting quoted company. The NSE Lotus Islamic Index has Lafarge Africa PLC and Chemical and Allied Products PLC incoming, while 11 PLC, also known as Mobile, and Nigerian Aviation Holding Company are exiting the index. The Corporate Governance Index of the Nigeria Stock Exchange, the Julius Berger Nigeria PLC, MTN Nigeria PLC, Name Insurance Nigeria PLC, NPF as Nigerian Police Force Microfinance Bank PLC, Royal Exchange Nigeria PLC, Sunu Assurance Nigeria PLC are all incoming to this index, while none is exiting the Corporate Governance Index. That's for the NSE Corporate Governance Index. In terms of the AfriInvest Banking Index, none is incoming or exiting, and that shows you how powerful that index is. Also, the same goes for AfriInvest High Dividend Yield Index.
None is incoming or exiting. For the Meristem Growth Index, GT Bank PLC and Julius Berger PLC are both incoming into the index, while Boa Cement PLC, Custodian Insurance PLC, NACO PLC, and Wema Bank PLC are all exiting that index. And finally, the Meristem Value Index has Dangote Sugar Refinery PLC incoming, while Berger Pens PLC, Dangote Cement PLC, Eternal Oil PLC, EcoBank Transnational International PLC, and WAPIC Insurance PLC are exiting the index. These indices were developed to allow investors to follow market movements and properly manage investment portfolios designed using the capital markets capitalization methodology. The indices are rebalanced on a semi-annual basis on the first business day in January and in July. So let's go on to our conversation, and as we look at the collective investment schemes, a very, very critical space in the market. And the first, I would like to ask Margaret Agbonlahor, give us an insight into the evolution of the collective investment schemes in Nigeria.
Thank you, Ottoabasi, for that question. When we say collective investment scheme, well, let me a little background. We are looking at investors, maybe investing their monies alongside other investors in order to benefit from the inherent advantages of working as part of a group. When we look at Nigeria, the CIS industry now, it's been over 23 years, and it's over the last 10 years, the growth has been more rapid. Because if we look at as far back as 2011, assets under management was about 74 billion. But as at yesterday, June 30th, 2020, we're looking at an asset under management volume of 1.3 trillion. That's in rapid growth, if you ask me. And let's look at it, even if we decide to take an average, we're looking at an average annual growth of 180%. Between you and I, and generally, we see that growth, it's synonymous, it's huge, and we are even still scratching the surface because the potentials are still there. They are still very high. If we look at in the last pre-2010, when we look at growth in the CIS, industry, we're looking at maybe valuation of the underlying assets. But now the growth is what the growth we see now is actually growth from fresh inflows into the scheme, people believing in it, and even people having more buy-in into the benefit of working with groups. For SEC, I think as far back as 2011, registered products with SEC was 40 to 45. But now, as of today, we're looking at over 90, which has doubled. And the potentials are still there. New products are coming in, new entrants are coming in. So it's coming up, the growth is gradual. Innovations are coming in, new products are coming in. People are getting more, they're putting on their thinking caps so as to meet the needs of investors.
Right. Interesting to note that asset under management is 1.3 trillion naira, and people are putting on their thinking caps to see how they can really invest. Mr. Boason is, apart from being a notable ambassador in the financial journalism space, he also is a strong advocate of initiatives like this, the CIS. So, Mr. Boason, you can go on, and then let's see, what are your thoughts around this, and then what would you like to ask Margaret based on CIS?
Thank you, Otto. I was taking notes and I was looking at very fantastic numbers, that data that Margaret has been churning out, and I said, where have I been? If these folks have been living, why you and I are just doing these shows? Otto, I think we need to just pack up the show and just join Margaret and the rest of them making money on the mutual funds or collective investment schemes. Now, so now look at this, Otto. If you look at what the SEC has done over the last 5 to 10 years, the SEC had been sing-song and been ringing about collective investment schemes. If you remember, the mainstream collective investment schemes in all the quarterly CMC meetings, what we call the capital markets committee meetings, it's all about getting folks to understand that, look, you can use collective investment schemes to enter the market. You've seen a number of operators in the market. So I'm not surprised today we're looking at about close to 100 funds on the market street. And I'll give a bit of this kudos to also to the government at the center. The government has also helped through its policies. If you look at the Sukuk, for example, the government embracing Islamic or non-interest banking, non-interest financial products, and all of that. So it's been a very sweet story to tell in terms of, look at 180%. If I have put some money away within the last 10 years or so, and I'm just knocking on Margaret's door this morning at FSDH, and I said, can I have a bit of what is going on? Today is July the 1st. I'll be looking at 180%.
Yes.
Even if you adjust for inflation, I'll still be smiling more than you are doing right now. So as I said earlier, perhaps it's a good time to get into. But I think this is good. Again, if you look at our history, prior to 2020 or so, the first wave of collective investment schemes in Nigeria with the first generation banks of those days, and the way they went down, we've seen a lot of comeback. The operators and the asset managers are much better than they were. Some of these were big firms who have the deep capital. They have knowledge of the products they are bringing into the market. They were not flight in the night operators or asset managers, as it were. The regulation from the SEC is also a lot better than it were 30, 40 years ago during the banking sector. About 200 banks in Nigeria in those days, in which everybody was just trying to put up a mutual funds just because it was the order of the day. So today you have less mutual funds or managed funds from commercial banks, but by professional institutions. Okay, institutions that are licensed and registered as asset managers, broker dealers, and rest investments like FSDH Group, with a number of subsidiaries in the market with professional expertise in running with it. This is what was missing in the areas of the banking sector, the banks running the mutual funds. They were doing this back then. I think they were just trying to use it to mobilize deposits into the commercial banks in those days. But now you have asset managers who are truly interested in wealth creation. But we have seen some developments, and this is why my question goes to Margaret, about the areas of this market. We've seen more of money market funds than equity funds, and a bit less of ethical funds. Try to segmentize this market for us and what drives the various interests that we have seen by investors into the various classes.
Thank you for that question. For investors, if we look at where the major funds are moving to, we look at the money market mutual funds. If we have to go by way of statistics again, assets under management under that particular product is about 800 billion. Then the next focus will be the fixed income fund. If we look at the money market mutual funds, the reasons are obvious. It's risk averse. There's easy entry, easy exit. So people still feel less, even though the returns are not so much, but my safety of my investment is key. So if we look at the money market mutual funds, we are looking at 800 billion. The next one will be the fixed income fund. That's looking at figures, that's about 200 billion. Then the next one would be the bond market. That's about 100 billion. That's just breaking it down to where the concentration is. So if you look at, if you're flowing with me, you see that the major focus is on the money market mutual. That's where it's easy for them to go. When I need my money, I can easily get it. I don't need to take unnecessary risk. The safety of my funds is important. So they just move there. That's where we saw focus now. That's the way it's going.
Very interesting.
Yeah.
Very interesting too.
So I'm interested in this class, but again, we've seen some of your colleagues rolling out dollar-denominated managed funds. What's the attraction here, Margaret?
For us, FSDH Asset Management, we also just rolled out our FSDH Dollar Fund. It's approved by SEC. It's a dollar-denominated mutual fund. What we do with it, we are going to invest in fixed income securities issued by Nigerian entities. The beauty of this, just taking advantage of these same collective investment schemes, you can come into this fund with as low as $1,000, which means people who would not have thought of me being able to invest in dollar funds, they can come in with $1,000. They can take advantage of our product. We came up in the market on June 10th, and it's still opened until July 10th. That's the initial public offering we're doing. People can come in. What are we offering these people? We are saying, come in, run with us. You can take advantage. You can have consistent dollar inflow. You can plan for your inflows. Maybe you're expecting returns in dollars. If you have payment obligations in dollars, you can use that fund to plan for it. So which means somebody that has as low as $1,000, you can take advantage of this group. And you come in with your $1,000, you have the expertise of proper fund managers to manage your funds. You have competitive returns. We are looking at a projected yield of about 6%. You have inflows in dollars. Even apart from preaching, you have a Naira fund, invest in this asset, diversification of your assets. We're also looking at diversification of currency. Why don't you make part of your investment in USD? And if we say USD, why not USD? USD is globally accepted for trade. So people can come in and take advantage of this product. So you said you've been away for some time. It's a good way to flow with us and put your investment in USD. So we're looking forward to getting you on board.
So when you look at returns on some of these mutual funds, broadly speaking, Margaret, broadly speaking, 180% is not bad news at all. But again, you're looking at the low yield environment, exchange rates, the value of the naira, and inflationary environment. For those who are, you are in charge of the high net worth individuals. So I'm not in that group. So I'm just going to ask questions for those who are the big boys, who are the high net worth. I think I belong to the SMEs level. I don't know. Okay, so for HNIs, what has been the impact of the current exchange rate, inflation, and now COVID-19 on their appetite for some of the products that are under management? Yes.
If we look at returns on investment, when we are talking about returns, that's the major consideration for most people. When I put my money with you, I'm looking at my returns. But we knew why the rates dropped for now. So once returns are dropping, it actually makes investment less attractive. But who would have thought that now people will be going for the equity funds? But that's not what we are seeing. We're not seeing that at all, which means maybe the capital market operators need to educate. There's need for continuous education of investors. Let them boost their confidence in this market again. Because while we're still looking at it, you know, the returns are low. People have not necessarily moved away because they are still considering safety of their funds. What percentage of your investment portfolio do you want to take high risk with? So we're looking at it as a change in the market. It's a gradual lull in the market, but we're expecting that things will start going up again. So people are waiting. What the opportunity is even giving to us is to be creative in your new products. Bring out products that will make investors be interested. Returns are low, but these are ways you can still make considerable impact increase on your investments. So it's making us put on our thinking caps to roll out new products that will address all this.
But are there new class of investors in the market aside the traditional folks who are you seeing that happening? We see digital revolution, we see fintech, financial inclusion, try to get young and middle level people who are in the creative industry, in whatever industry, are they investing in mutual funds? Are you seeing new names? Don't name names, but
big names.
Are you finding some
big names?
maybe some of the multi-millionaires who are in the comedy, entertainment, music, movies, whatever. I just see this new class of investors in the Nigerian market.
If there's anything the COVID pandemic has done, it's changing people's value system, the way we think. So those people will not have expected to be thinking investment. Everybody is thinking of investing now. So these names you are talking about, their thinking is changing. There is need to save for the unexpected. There's need to have an investment portfolio. You cannot just afford to just live the way you've been doing. So all these names we're talking about, like you said, we're not calling names. They are going in the world of investment. Even the young ones, I would say they are on the street, they know they are on the high-flying street. The young ones, because of these mutual funds, you can be part of a group with little monies you have, because we have products that with as low as 5,000 naira, with as low as 10,000 naira, you can be part of that big fund. So the young ones, the big ones, everybody is saying that, oh, you mean I can easily start putting my 5,000 every month? I can easily put my 10,000 every month, and I'm growing my portfolio. So that new generation, the young, the middle class, they've started thinking investments. And because this platform is making it easier, I don't have to bring $1 million to be an investor. If I have 10,000, I can start. I can actually set up monthly debits on my account, which does not affect me, and automatically my investment portfolio is growing. So that's the way it's going. We are seeing that crop of people now. Yes.
Oh, interesting. I'm never too old to join, by the way.
No. Be too old
never too old to join. Otto would be among the first.
Yes, that's what to invest.
This is very nice, because at this time we are facing the challenge, like we discussed several times, the proliferation of different kinds of platforms and schemes that are not even registered, are not regulated, and are seeking to even swindle a lot of young people. And so to Margaret, this calls for, like you said, more investor awareness and investor education. How are you deepening that for mutual funds like the dollar-denominated mutual fund that you have, and also other products that you have?
Yeah, for our products, apart from the one-on-one discussions and all that, our social media, the technological wave is helping us drive this product very well. On social media, where we see the young, the old, everybody is on social media wave now. So a lot of promotions are being done on our products. Our handles are very active. New products we have, we sell. And when there's room for things like this is another platform, we can sell all these products. And the awareness is on a continuous basis. It's not one-off. We blast, sometimes we do email blast, we do product blast. When these products come, we just put it out so that everybody is aware. So every opportunity we have to talk about our products, we just make sure we maximize it and make sure people get the benefits to them and to us.
Yeah. Yeah, I mean, it's really nice to hear, because leveraging digital platform reaches out to millennials and creates that awareness to them on it. In terms of the regulatory space, we've seen a lot of activity from SEC in encouraging and deepening the CIS space. And how would you assess it in terms of the support so far from the regulatory space?
With SEC being there, it's giving more confidence to investors. It means you are not just running amok the way you like. Somebody is in charge of what you're doing. And once you are going out of line, there's somebody to call you to order. So with SEC intervention, what I've seen is that they keep us in check. We can't just run because we have these funds in our portfolio. We do a lot of things with it. Cooperation from them has been very good. We hope to see more in the future. We hope to see more. It can never be too much, because sometimes investors, apart from looking at us, they want to see who is watching you. These people, do they have our backs? Can we ride on the confidence they've given to us? Can we trust what they've said? It's okay for them to say, we're working with this group of people. It means they're saying, go ahead and invest with them. Your safety of your funds is not in doubt. We've got your back. So I think that's what's working. And we will see more of it in future, like we're getting.
Yeah, I mean, it's quite innovative. And when you look at the fact that, like you said, the money fund, yes, 800 billion naira, 200 billion naira, the bonds, 100 billion naira, a lot has to be done there. But in terms of the traction for your dollar-denominated mutual fund, how has it been from the HNI space down to the other segments in terms of the receptibility and engagement?
What we have seen so far has been quite encouraging. The offer is still open, so there's still room for more. Some people wait until last minute, but what we see, because we had a product we have that product before, like the Eurobond fund, we had something like that before, but now we have gotten it registered with SEC, so which gives it more acceptability, more confidence. So which means people we already have on that platform, they automatically moved with their consent. So the platform is not as if it's an empty platform. So people are now getting more buy-in. People now know that if I have $1,000, I can actually plan for my obligations. So why don't I start today? So we are seeing a lot of traction. We are getting responses. People are filling the forms. People are sending in their orders. We're seeing it. So we know, we are hoping when you bring out these funds, we are praying, okay, let it be fully subscribed or even oversubscribed. So that's what we are expecting, and we think it's going to be like that from what we've seen.
Yeah, yeah. Just prior to when we started, we talked about the indices, what Nigeria Stock Exchange has brought out in terms of review from January to July. I mean, the performances and the ones that are incoming and exiting. Boason, first, your first reaction to those indices and what you're seeing.
Well, it's a rebalancing which every exchange does at every point in time. So it's necessary depending on the measurements or the parameters set by the exchange, rather inclusion or an exclusion. An exclusion does not mean that the company is dead or not doing well, but it just means that can you go and get ready, get back to the field of play? You know, like it happens in football.
Yes.
You just say, go take some rest, get some glucose or whatever, get some multivitamins, walk around a little bit and get back in the field of play. Then you continue to show yourself. It is responsible of every securities exchange to keep check on the market operators, the market participants, and the issuers, which we call listed companies. So this is very important. The regulation that goes into mutual funds, as I said earlier, are much better than before. I, as a financial journalist, I'm particularly happy that the SEC gospel of collective investment schemes in Nigeria were now over $1 trillion naira and climbing. With fintech and digital revolution, financial inclusion, I know that we'll see this figure continue to expand. But as Margaret rightly said, we need to deepen the underlying market as well. I mean, on the equity side.
Yeah.
For the fixed income, which is basically your treasury bills and your Naira bond or whatever, that is already deep and it can be deepened. The central bank, the debt management office, the Ministry of Finance, some state governments have been to the market, they're looking to raise bonds. So you've seen that the fixed income is huge. You have the FMDQ, Securities Exchange, a very deep platform, bringing hedging products and what have you in there for currency. So the market is a whole lot more busier than when some of us are stepped onto Broad Street.
Yeah.
What I'm trying to ask from Margaret is that two things. In terms of creative products, innovative products you're talking about, will you folks be thinking about what to call index-linked funds? For example, if I can pick about 5 indices of the NSE, for example, the banking, oil and gas, consumer and industrial goods, and maybe insurance, put them together and give me a fund on that. Okay, as one. Or with the pandemic, the coronavirus, which is likely going to be with us quite some time to come, and changing the way we live our lives and work and play. We saw AFDB did about some $1 billion of what we call social fund, which is, yes. So do you think this is something that you folks in Nigeria should be thinking about so that folks can see the need to mainstream healthcare, research and developments in pharmaceuticals,
food,
in health, hospital, basic healthcare, and what have you. Do you think it is time to bring something like this? Maybe if folks are saying, look, maybe I don't want to do a life insurance, but again, they can do a mutual fund targeted at healthcare and what have you. Well, do you think that could just be something to work on?
Yes, thank you for that. That direction. You are giving us things to work with. So even if we're not thinking in that direction, just provided a good platform. Because like I said, with the pandemic, nobody planned for it. It's happened. So people are thinking differently now. Like, you know, when I said earlier that the growth in the market, we would have seen that because returns are dropping, the equities market has remained flat. So with this kind of product thinking, that is a good way to jumpstart and build confidence in that. So when you bring out a mutual fund that is linked to specific sectors that have remained vibrant in spite of the pandemic, those particular, some sectors like the health, the food, you understand, so those areas, which means you can actually design products around those index. So it's going to be, I think, it's something, even if we're not thinking, I'm sure some of us are already thinking, but we have not thought about it deep. I think this is the right time to just link those things that remain constant in spite of any situation. So we're thinking it's a good way to go. And I'm sure we will start seeing bonds, mutual funds in that direction very soon. A lot of things are on the corner. A lot of things are in the bond and they are coming up.
That would be really great because I'm just looking at what the federal government is doing, what the central bank is doing in terms of funding healthcare, health pharmaceuticals, the kind of interventions, hundreds of billions that will be pouring into that sector. And I'm sure foreign healthcare, foreign pharmaceutical companies are looking into Nigeria. They're looking at how we can develop. Government is talking about our own alternative medicines, bringing them into the conversation, universities to develop R&D and what have you. So I just think maybe it's a good time to just come into the back door, put a mutual funds there for healthcare, for hospital, whatever you would call it, the social help. And then if it's open-ended, fine. So I can just get it, take some cash flow, invest in it, and come out. Because sometimes folks looks like life insurance that they just putting money away, they don't save, and they don't want to die. So as long as they are not dead, the money, the insurance money is not coming out, so there's no claim. But if it's a mutual fund, well, 3 months, 6 months, you can put back some of the cash flow, leave some money back there again. At least they're eating their money while they're still alive.
I think that's a good way. That's a good way to look at it. And I'm sure this kind of funds, well, at least, like I said, we are a regulated sector. So even when we put these thoughts together, if SEC thinks it's okay to go, why not?
SEC will give a good go ahead. Don't worry.
So those kind of products, because those are the innovative thinking we're looking at, not the normal anymore. Normal for us now is dead. So the abnormal has become normal, and that's the life we're living. And like that's how it's going to be for a long time. So creative thinking needs to be top notch.
Okay.
I'm sure we'll see that. That's a good one you've given to us. So we're not looking at it. We'll start looking at it. Yes, thank you.
Yes. So Margaret, in just a few minutes, could tell us the outlook for the CIDs, the collective investment schemes, mutual funds. What do you see second half of the year has started today, and what are you seeing as the outlook for this space?
Okay, thank you, Ottoabasi. For me, the future looks good. We're looking at more products, more new innovative products, more financial awareness, thinking of products, move away from the traditional and think of products that we have more financial inclusion. Think of people that will not, the retail arm is a good way to pull funds together. So we have to look at things that will, impact a lot of people. So we're looking at more growth, and with the technological framework we have, the technology drive a lot of things. So I'm seeing more growth. Like I said earlier, we're still scratching the surface, even from the supposed 1.3 trillion. Yes, I said asset under management. We're still scratching the surface. So we're looking at more products, more whatever. Like the Nigerian Bureau of Statistics said, we have about our population is 200 million, and 70 million they are employed. So even if that's 70 million, we're saying let's give an average of 50,000 every year. Everybody decides, to just invest 50,000 every year minimum, and it will be more than that. We're looking at a 3.5 trillion growth in 1 year.
Wow, that's
you understand? Yeah. So when we look at it with the numbers, that's the beauty of the collective investment scheme. With numbers, just 50,000 from these people, we're already looking at 3.5 trillion growth. So a lot of potentials. Still green. Yes, that's what I see. Yeah.
Nice one. I mean, about 2 trillion. That's nice to know. Just in a minute, your closing thoughts on this conversation.
Well, my closing thoughts are very simple. I love what has been going on. I need more products in the market that are focused on new areas. Like rightly said, we need a diversified investment market in Nigeria, where we diversify the markets and the instruments and products that are available. What happens is that it helps the government in its own policies and actions. So it's not enough when we say we want the government to develop the country. The market will be an enabler. When the government sees that, okay, we're thinking in the right direction to mainstream healthcare, mainstream agriculture, and the market move products and services and all of that to back that up, that will be a game changer for everyone.
Indeed.
Thank you, Ms. Margaret.
That's what we need to start the second half of the year, a game changer. And thank you very much, Margaret Agbonlahor, head high net worth individuals, HNI sales for FSDH Asset Management. Nice to hear that you have 1.3 trillion naira. That's the whole of industry. The mutual funds have, the CIs have 1.3 trillion asset under management, and you are looking at more than 3 trillion. Yes, we can. I mean, if we continue the investor awareness and continue to deepen the space with innovative products. Thank you once again for the time, and look forward to more conversation with you on the collective investment schemes.
Thank you.
And also, thank you very much, Mr. Boason Omofaye, the quintessential financial Frontier Africa reports. Thanks once again for the advocacy and the insights into what we can do in our capital markets. And thank you, viewers, for joining us. It's the first day of July, second half of the year begins today. We look forward to an interesting time discussing developments in the financial and capital market as it relates to our economy. You can log on to our website, www.proshareng.com, to watch our videos with our reports and analysis.
To come your way again, thank you for watching. Have a nice day and stay safe.